down and recruited him for this presentation. Because one of the best practitioners on the planet, Mary Jo Ehrman, does anybody know who she is? Yeah. Okay. Told me many times that this guy was her mentor. And you know, that speaks volumes to me. And so I said, you've got to share that wisdom with these guys. Wade Borth.
Thank you, David. Appreciate it. And I appreciate that. You know, gosh. So this last year I went through, and I know this probably has nothing to do with the title, but I want to share kind of what David said. I went through a process this year just to try to figure out my purpose statement individually and who I am and what I wanted to do. And I was going along and I was kind of hitting this roadblock. And then David calls me up and he says, I need you to present at the think tank. I said, I'd love to present at the think tank. So I put together this great slide presentation. If anybody knows me, and Mary Jo's not here, they know that I love grabbing illustrations. I like ripping apart illustrations. I like, there she is, thank you. And you can ask her. We're just talking about you. And we work together. I just take illustrations and I say, let me see what we can do with this. So when David asked me, how do we build the perfect IBC policy, guess what I was doing? I was doing the crap that doesn't matter. And then, I told Mary Jo this on Thursday this last week. I had this whole presentation put together about slides and the new CSO tables and had this whole conversation put together. And I literally woke up in the middle of the night and all I could hear in my ear was this sound. They're lies, lies, lies. Who used to say that? Nelson. And I woke up and I said, this is all crap. I just threw it all in the garbage. I said, I got to start over. Because it's not about illustrations. It's not about the policy. It's about the process, right? We've been taught that, and I heard Jim Oliver talking about it. I heard Vance Lowe talking about it. I mean, I kind of joked. I said, being at the end of the day, I said, all my thunder's gone. And they've said everything I'm going to say. What I'm saying is a little different, and how my delivery is a little different. So it's like a puzzle. Here's my puzzle piece. Here's Jim's puzzle piece. He's in the back room, so I'll pick on him. And everybody else kind of fits that puzzle, either his piece or my piece. So we can be saying the same things, and we're going to get a different message across to people saying the same thing. So, and he's saying 60% of what I'm saying, and I'm saying 60% of what Vance is saying. So we're all saying the same thing because we all believe in what Nelson taught us. And so going through this process and putting together, maybe you can recognize that, that's the Fontanelle when we had Nelson out there. And so part of my purpose statement was leading bell cows through God's infinite knowledge. I mean, I shared with Nelson last year, I went to Vermont to do a speaking engagement with a bunch of libertarians.
Porkfest?
What's that?
Porkfest?
No, it was, I forget the name of it. It was after Porkfest. That's their money raiser. Are you from Vermont? What's that? Oh, okay. So anyhow, I was out there and I told Nelson I won't be here next year. That was last year. And he says, that's fine, you go out and spread the message. And I said, well, what do I say? And I said, what do I share with these people? And he says, you'll know what to say. He says, that infinite knowledge is already there. That knowledge that you need to know is already in you. He says, I've just watered it for you. That's what Nelson used to tell me. That knowledge is already there. We've already watered for you. I see so many heads bobbing back here like that's exactly what they said to him in the past as well. This was my mission statement. This is my purpose statement. I thought, how fitting was it that Nelson and I, in essence, have the same purpose statement. But we do. I think we all have the same purpose statement. Leading bell cows. Now, how many people know what a bell cow is? A handful. So if you have cows in a pasture, people that milk know this is probably better than anybody. We didn't milk. But if you have cows in a pasture, you get that one cow going through the gate, guess what the rest of them do? They head through the gate. Because that one cow is the leader. Nelson was teaching us to be his bell cow. And so part of that is that we have to know what his message was. We have to know what his message is. And it's all there. It's all in this book. I got it here somewhere. We just have to look. Yeah, it's in there. Well, you all know what it looks like, right? So part of what this presentation was like, don't get caught down, don't get bogged down in the little details of policy design. And that's, teach the process. Teach what we need to know, right? So So here are some of the key things that I take away from my conversation with Nelson, and really what drives me when I look at, if I meet with a client and we're going to design a policy, these are some of the things, these are my values and hopefully the client's values, and then we're meshing together. Because not every client's going to mesh with you. Again, I heard Jim speak just an hour ago, and what was he saying? He's like, he didn't like working with doctors and attorneys. Okay, why? Because they maybe have the arrival syndrome. I agree with that 100%. But there are people that do want to work with them, that do work well with them. And that's the whole point. Find who you want to work with. Know who your client is. But have your set of values and make sure their set of values match who you are. So long-term thinking, you know, what do I have to say about that? That's number one for a reason. Think long-term. How many times did Nelson ever say that? A bazillion? Is there a number big enough? Infinite. Exactly right. Intergenerational impact. That was the one I put together. I really started to see this working with clients, work with my own policies, my son, but also working with clients and saying what we do today with our clients is important. It makes an impact. But where's the greatest impact come from? The next generation, right? So we have that age class of you know, trees like Nelson was talking about. We talk about it. Mary Jo and I have talked about this many times. You know, we have farmers. How many times does one generational farmer have to purchase the land from the previous generation? What? The bank, right. The bank drives it, right? But we want to make that impact. So we can have not just this generation, not just my generation, but my son's generation. Even more importantly, in Nelson's book, he talks about that third generation. Empowering others. This is one of the key things that is when I design stuff and when I work with clients, I want to empower them to know more or as much as I do about banking. Yeah.
Sorry.
That's right. That's no problem.
Don't mind me.
Empowering others. You know, how important is it to teach your clients to be as proficient at infinite banking as you are? How important is it? If you hold what? Infinitely more. If you're the gatekeeper, if you think that you're the one that holds all the power, that's not a position you want to be in with your clients. So empowering others to know as much about IBC as you do. Seek the truth. Again, these are things that are through my purpose statement that I think align with infinite banking. Seeking the truth. When we talk about policies or we talk about banking, sometimes the truth hurts. You know, when I look at I think I heard David talking about it. He's like, I have these policies I wasn't doing a very good job of keeping up on the loans and so on and so forth. That kind of hurt, but that was the truth. It served him well in the sense that he created a hole for that windfall to come into, but seek the truth in everything you do in life and especially in the banking process when you're dealing with clients. Work with others that have integrity. And what's that come back to? Don't steal the peas, right? Synergistic relationships. This is a great one. So the synergistic relationship we have in this business are with who? Who do you think are the three parties, and maybe there's four, that when we're teaching people about infinite banking, who are the outside parties that should have a synergistic relationship? You, your client, and maybe the insurance company, because those are all three parts of that process. And there might be more. There might be your business or whatever it might be, but whatever it is, all those relationships working together make more than each individual parts. And then the last one is, you know, God filled me with the infinite knowledge. The knowledge of all of this is in us all. It's in our clients. All of it's in our clients as well. Sometimes our job is to help them identify it, to understand what it is. So, questions there? Okay, so this is where I started originally with my presentation. I was like, man, David tasked me with teaching about how to build policies, and this new CSO table came out, and it was like this big hurdle, and I'm like, oh man, what am I going to do here? You know, and what I hear in the hallway is a lot of conversation about, you know, how are you handling this, what company you're working with, because this is on our top of mind, the new CSO tables. Is everybody familiar with what that is? Who's not familiar with what that is? Okay, so everybody has a feel about it, what's going on. I'm probably very opinionated about this. And from the standpoint of that issue is a real hot button issue in today's marketplace for us. Do our clients know about it or really care about it? I don't give a damn. We make it a big issue. And so it's a big issue in our head. So when we're building a policy, we're always trying to say, well, where do I get the best return? And the problem I have, and I've been doing this business for about 30 years. I've been doing IBC since about 2007. And so when I look at this, I go, if we're concentrating on this idea of, gosh, the CSOs are killing us, or this company changed what they're doing, or whoever they are, I'm like, that is such a short-term vision about what's going on. But everybody's hung up about it. That's the buzz of conversation I heard 20 times in the last day and a half. What's going on? You know, you ask the guys from Canada, I don't know what the impact is up there.
No impact.
No impact, right? But if we're teaching them the right thing and doing the right thing with our clients, it should not have an impact, because that's just about how long people live. You know, Nelson talks about it in his book. You know, he talks about how to build the policies and how life insurance works. But it doesn't make any difference. People are living longer, so we're getting better long-term value. This should be a great thing. But I hear so many negative things. And again, the thinking comes in our head. It's like we have this these weeds planted in our brains, and we're letting the weeds grow in the garden, versus going there and pulling the damn things out and teaching the right things and focusing on the right things. And then that's when it comes into talking about the different company illustrations. I would say that all our mutual friends, all our mutual insurance company friends are our friends. I was the last of 9 children. I was the runt of the family. Just kidding, I'm not. But do I love all my brothers equally? No. Do I love them all? Yes. So what we do is we find people that have similar likes. My closest brother and I used to fight like crazy. We actually got to the point where we put so many holes in the walls in our house that my mom threatened just to leave them, and she did. So if they were there was this big hole in the wall right where I threw my brother through the wall. We used to, yeah, you been there? And she was like, I'm done, I'm not gonna fix it anymore. So it stayed there for 10 years. 10 years, we were like 16 and 17 years old, he's my older brother. So it was like forever it stayed there. It was just kind of a reminder that we had this hole in the wall. It wasn't like it was all the way through, but it was just a big indentation, but it was a good reminder. He and I did not see along when we were younger. We developed, we grew, and now we're the best of friends. He's my fishing partner, and we love to do different things like that. So when we start talking about how do you design a policy, all mutual companies are good. I can't say they're all great, but they're all at least good. Some have other challenges, some aren't going to have as many challenges. But at the end of the day, they're still mutual companies. The problem I have in this industry is that we like to eat our own. You know, we think if I'm working with this particular company or I'm working with this particular company, that's what differentiates us. And that's the problem, is that has nothing to do with it. You find a company that serves your needs, serves your clients' needs, and you work with them. So I'll get off my soapbox a little bit about that. But each individual company, well, I'll get back on it just real quick. From my standpoint, especially with the CSO and what I've been hearing and the conversation that I've been having with probably a couple dozen producers, I make the point that they all kind of have to drink from the same well, right? Mortality came out, and this is the mortality table we have to use. Yep, that's great. That works fine. We all kind of have the same expenses. We all see expenses going down. Why is that? Probably technology, right? But it also costs technology, so maybe there's a short-term blip. But again, we have to think long-term. What greater industry do we have right now than the life insurance industry to think long-term? I heard a CEO of one of the companies I write with, and it was so powerful. He says, we're writing policies today that we're going to have to pay off in a death claim 100 years from now. Think about that. I'm going to be long gone in 100 years. I don't know about the rest of you guys. But so the point being, the company itself, or the lack of product, or whatever it is, isn't the issue here. You know, the companies provide a product. Again, they have the same mortality in essence. They have the same expenses. And then it comes back down to, what are they investing in? And I look at companies that are investing in stuff that, Again, mutual companies are all pretty much the same. They drink from the same well. I don't know that anybody has a magic wand. So I think they're all kind of in the same boat. And I would rather have my company err on the low side than on the high side. But okay, now I'm up off the soapbox. And again, it goes back to what Nelson said, lies, lies, lies. Because no matter what we put out there, even a year after we have a policy, the guarantees are now what? The guarantees are lies, right? They're wrong. Because my money in my life insurance policy, my whole life policy, once a dividend and interest is paid, what happens? It becomes guaranteed, right? It moves up. So that illustration you had the first year, even on the guaranteed rate, is wrong. So why do we put so much stock in what's going on with policies? Again, focusing on what's more important, which is the process of how you bank and how you make money. All right. Got a question for you. How many pages in Nelson's book deals with setting up a policy or a policy design? Or talks about a policy? Nope, zero's not right. How many? How many? 11. Anybody else? You're closer with one. Close. It's actually 3.5. I say 3. Nelson spends 3 pages in his book of 96 pages to talk about how policies work. Does anybody find that interesting? I didn't realize that until I started putting this together on Friday night. I go, 3 pages, only 3 pages here. He talks about whole life, and he talks about, single pay only, and then he says 10 pay, and then he says you want to be somewhere in between and avoid the, again, when he originally set out with he had the MEC limits back then, but his original policies didn't have a MEC limit. And I remember having policies in the books when I first got in the business of people having single pay whole life policies, non-MEC, pre-Tamara and Tefra. And a guy, I tell the story, he says, so he was a farmer down south of me, and everybody went to him for money because he had money. And he says it was 1981. Price of Durham was at $10 a bushel. Now, nobody that farms here probably really cares, but he says, I made a ton of money that year. I put $100,000 into a single premium life insurance policy. He says, that single premium life insurance policy made me millions. He says, people came to me because in the 80s, farming was terrible. He says, they came to me because they had to finance the homestead, or they needed some money to keep the bank out, or they had to do whatever for a piece of equipment, or they sold them equipment at half price so they could have cash. But access to cash was the real key. Now, did he understand or want to know how everything worked inside that policy? No, he just wanted to know that he could get access to those policies. So anyhow, so going back, I'll talk a little bit about Nelson, because I think it's important to understand how the companies work and the policies work. And somebody asked me earlier, they said, are you really going to talk about how policies are put together? I said, no, not really. I want to talk about the thought process behind a policy, because each individual person needs to develop for each individual client, you have to develop an individual policy. And what I see myself, I'm not above anything I'm saying here, because I find myself in the same trap. Again, I've been doing IBC for 15 years probably, 12 years, 13 years. I say, you just don't get this pretty bearded face to go along with that. You get 15 years of mistakes. So what I'll show you is that I've made mistakes along the way, and I think I heard somebody else say it. Again, what I'm saying is never an original thought. Jim and Oliver and I were laughing about that over this morning over coffee. I said, I don't know that I've had original thought about this whole thing. And I was thinking about this as like, oh, this is my thought. And then I started reading Nelson's book. I'm like, crap, it's right there. He said it a long time ago. I think what happens is you read it often enough and it kind of comes back up in your brain. And you think it's yours, but it's not. So, but we'll talk a little bit about kind of the structure of policies. Because for somebody that's brand new, and I know I talked to a couple people that said they're just brand new, just got their certificates yesterday. Or maybe they're not even practitioners, don't want to be practitioners, they're clients. It's important to understand how important PUAs are and policies are, but it's just that, it's important to know. It shouldn't be the end of the conversation with your client. So, when I heard this one the other day too, I kind of thought it was rather interesting. Did we sell policies before 1985? Did we? Is anybody around here selling policies in 1985? How'd you sell policies in 1985?
Death benefit.
Right, death benefit. Did you have computers? Did you have illustrations?
No.
Before 1985, right?
We had rate book.
You had rate books, right? So here's your death benefit, here's your premium. And then everything else was, I'm putting my money there because I know it's going to go up. But beyond that, you didn't have an illustration. I heard this from Todd Langford. I thought it was the greatest comment in the world. We're all stuck. We're all just so focused on, God, look at when's my cash value going to break even? What's the cash value going to be? It's important, don't get me wrong, but it's important to us more so than it's important to our clients. Because they know that their cash is going up and they have guarantees and they have access. What more do they really need to know, right? And when your clients, before 1985, I can't believe you sold policy when you're 12. When you sold them before 19, they'd get their statement, they go, oh, I got cash value. And then you'd either find a use for it or let it grow for the next year, right? And that's the way it worked. Nelson bought his first policy. Do you think he had a spreadsheet and illustration to figure out how quickly he was going to break even? Probably not. He didn't have PUAs even. So, and this is another interesting comment. Who knew who Norm Baker was? Yeah, so this comes from him. No deals, there's no deals in the insurance business. This goes back to what I was saying a little earlier. When you're designing a policy, and when I talk about designing a policy, so I hear, oh, you want to do 90-10, you want to do 50-50 split, no term, you want to do 75 PUA, 25 base. That's all just about the process. But you have to understand, this always reigns supreme. And the other adage is, life insurance companies never lose money, for the most part. Good life insurance, good mutual companies, they always make money. But if you think about it, when you design a policy, it's all about give and take. Even though you might not think about it that way, it is a give and take game. Because there's no deals in the insurance business. You want to dump in a ton of money up front, you want to add a lot of term, what's the takeaway on that? There's a cost, right. Is it a bad cost? Maybe not. Depends on what the client wants. You just have to understand what that is, right? I know very successful IBC practitioners, they do a 50-50 type of blend because they think long term. But at the end of the day, is a 50-50 blend made for everybody? Absolutely not. And so we're either lazy in this business, which we all are to some sort, at one time or another, but we kind of always fall back to say, I want to do everything based upon that design. And what we find is sometimes no PUA can be very helpful. Can anybody think of a time where if a person wants a banking policy, that a no PUA can be very helpful? Rated case, old person, what was that? Max death benefit. Those are all important. But how about the fact that you only have so much insurability? Right? So if you add a PUA rider, you're using up your insurability. And if you need a huge amount of death benefit and you want to do banking and you have a very long-term view, going back to you think long-term, then maybe no PUA is a great banking policy. So my point being, there isn't a perfect IBC policy. But I will show you what the perfect IBC policy looks like to me. So I went to my first IBC conference in 2000. I think I was talking to David, 2007 and 2008. Was anybody else there? Was that back in where they had it at the old clubhouse? Remember that? Were you there, Jim? I don't. But whatever. It was a room about half this size and about twice this long. So when you try to present, you had to look a long way. But anyhow, the point being is I read Nelson's book 3 different times. I picked it up, I read it, I'm like, Pah! I threw the damn thing down. I picked it up again, I'm like, there's something there. I put it back down. So finally I picked it up again, I'm like, man, there's something really there, but I don't get it. I didn't have a mentor. I didn't have somebody to help me along the way. So I called Nelson up and I said, hey, I'd love to be able to come down and buy you dinner. So I said, I don't quite get this. And he says, well, we're having a think tank. I don't think we call it a think tank, but we're having a think tank in February. Why don't you come on down? So I came on down, and I'd read his book a couple of times. I left there and saying, I know what we have to do. And this is the first policy that I wrote. This is on my son, Josh. He was 1 year old when he was actually 6 months old. So this, to me, is the perfect IBC policy. Why is it perfect IBC policy? First step, right? First step, what's the hardest part in walking a marathon or running a marathon is taking that first step. That's why this is the perfect policy for me. Anybody else, it's like the perfect policy is the one that fits them, that they will use, and engage. We talk about, and again, I thought this was my idea, and I think I read it in Nelson's book last night when I was going through his book. What's the thing that it takes to do IBC? It starts with a D and ends with a I-S-E, or D-E-S-I-R, right? Desire? I can't even spell. Desire. Desire. It takes desire. And this was my first step into that realm. It's like, I wanted to know more. So this was and again, I heard Jim Oliver say, but he makes a great point. He said, we start too small. But I didn't have a mentor at the time. I had Nelson, but I was skittish. But I started that first policy, and I'm like, this works great. And I started another one, and it ballooned from there. But the perfect IBC policy is the ones you can get your client to start engaging, use, and then go, I need more capacity. I need more warehouses to store my capital. So whatever that is, if it's $100,000 first year premium, if it's $1,000 premium. And I just wanted to share with you because it's kind of interesting. This is his cash value projected. Now you have to realize that's 12 years ago. His cash value I checked last night was $12,846. How amazing is that? Not that we focus on that, but I'm just like, man, these insurance companies know what they're doing. It's like they've been around a while. So, again, going back to the perfect IBC policy, I don't know what that is. You have to figure that out with your client. Part of it is knowing your client. Figure out who your client is and figure out how do I make that work. So, all right. So what does it take to develop the perfect IBC policy or any IBC policy? And these are I thought were mine, but they weren't. I said time, money, and discipline. That's whenever I start a meeting, if I'm doing a go-to meeting, I have my name there, and then on my writing pad, I'll have TMD, time, money, and discipline. And I talk about this with every client because this is how important it is to me. Time. You have to think long term. I tell people all the time, I said, if you're going to talk about, I can do better in a CD or money market in year 5, 7, whatever it is, I'll say, we're probably not a good fit. Because it's the process and it's the time value that we're going to be talking about. It's not about needing that money immediately, or maybe it is about needing it immediately, but it's not about having it. It's like it's a long-term event that we try to teach you the process. Then I said money. And again, I had to laugh when I was putting this together. I'm like, I thought this was genius. Time, money, and discipline. That's what you need. And I read Nelson's book again. It's like, think long-term, don't be afraid to capitalize, and don't steal the peas. I'm like, Jesus, already there. The discipline. I tell people, I can show you this, and I can show you this. The thing I can't do anything about is that. You need, individually, we need discipline to make these things work and make these things happen. I'll tell you, if you're a new practitioner, this is where I think your conversation, this is my opinion, this is where I think your conversation should go. Talking to people about dollars and decimal points will get you nowhere. Talking about habits and I remember Vance had it in his presentation. I can't remember, I've seen so many presentations. They talk about different sides of the ledger, habits. That's what we want to talk to our clients about. Because what's going to happen to the time and money? Those are going to be always moving marks for us, right? Somebody asked, how do you flow all your money through your policies? Well, there's a lot of great answers, but I think I heard it right. It's like our income should always be increasing, so it's a hard target to hit. So time and money is always going to be a moving target. The discipline that we show our clients and we do ourselves and we teach our clients or help them understand, that's the part that's going to take us the furthest. Again, it goes back to don't steal the peas. So again, when we talk about building policies, listening to your client. Don't take a presupposition of what we think that policy should look like. Figure out what their needs and wants are and say, okay, we can build one like that. And again, because we're creatures of habit, we want to always go back to the same structure that worked with the last guy, or the last guy, or the last guy, right? So listen to your client and find out what they really want and what they want to present. And so it's important from a standpoint of each client, and anybody that's got a handful of clients, they might fit into 90% of them or 80% of them are going to fit probably in the same kind of policy structure that you put together for all your clients, because you're going to attract people that are like you for the most part, right? But it's going to be that 10% that if we don't truly listen to them, not just hear them, but truly listen to them, that we're going to put them in a position that, boy, it's tough for them, or we're going to put them in a bad position because we didn't listen to what their needs or concerns were. I got a guy that says, hey, I was working with another guy, we got $300,000 that he wants to put in over 10 years. Great, let's do that. We can design that. But if we would just do it the way we normally do it, it didn't really work for him. So we had to listen to what he was trying to tell us. And so he had this pile of money, and so we designed it. But we designed it, I think this is part of a good policy design too, is, and I heard David Stern say it, I heard Nelson say it, build it so you have room for windfalls. So I'm going to share with you a couple of mistakes I made, because I think it's probably the best lesson. But let me get into talking about is there, it's supposed to be there. I can't spell or type. Is there a wrong way to create a policy? I think there is if you're not listening and doing what your client's needs are. But is there a wrong way? Is there a school of thought that says there is a perfect way to do it? I don't believe there is. Somebody will say, well, a 10-pay limited pay policy, that's the way to go. Somebody will say, that's crap. I'm like, it's just a tool, right? So if I take my hammer out and I try to hoe my garden, it's a great hammer, but it's a shitty hoe, right? Look, is that on camera? I'm sorry. The problem is we try to shoehorn these products into a specific situation. We should say, these manufacturers, these insurance companies have given us a lot of great tools. It's our responsibility to know how those tools work. Do I use a term rider? Maybe that's what works for the client, if that's what they need. But understanding when you use a term rider, there's some negative side effects to that, right? If that term rider comes off, I'll share this example in a second. I was sharing with Kenneth. My wife's policy had a term rider on it. I'll show it here in a second. She was mad as hell when we dropped that $400,000 of term insurance off her policy, which was originally designed to do 10 years ago. But once she had it, she didn't want to give it up. Give the policy up, that is. So adding a term rider maybe makes sense. And again, we talked about this, 50-50, 75-25, 90-10. All depends on what your objective and what you're trying to achieve. So, kind of went through that. I want to share something with you real quick. And I've heard this said a couple of times, but I'd like to share. Everybody see that? Yeah. Okay. So I like to talk about what's called IRR versus ERR. Somebody's probably seen this before, right? Anybody seen this? So this is where we get hung up, right? We want to see what the internal rate of return of the policy is, right? So we see over 10 years or 15 or 20, 3 to 5%, whatever it is. I always tell people that's really the unimportant part. The ERR, and again, for new people, this is, for anybody that's been in here, was what I call the external rate of return. What's your external rate of return? And again, this wasn't me, this was probably Nelson, it's in the book. He talks about what can you do with that money. When you have access to money, will good things find you? So when you're designing a policy, keep this in mind. It's like, we don't really, it's important because it's a topic of conversation where this is at. But more importantly, this is unimportant. If you have the ability, like Nelson says in his example, and I'll probably go to Richard, he knows all the numbers by heart. But when he had a chance to buy that forest land from somebody that had to sell it because he was in straits, he bought it for $10,000 and sold it for 20, or you remember? Right. Yeah, but he doubled his money. So there's an external rate of return. Right. Does he really care what he made inside of his policy? The fact he had access to cash is the most important thing. So don't get hung up on saying, well, what's the internal rate of return here that we should be talking about? Paid up policy, a paid up addition. I think it's good to understand, because I know there's a lot of people out there that go, what's paid up addition? What is that? Is that a deposit? Does anybody have a really good explanation for what a paid up addition is?
Mini policy?
Mini policies, that's close. I think, is there an actuary in the house? They could probably correct me on this. But it is, in essence,
Single pay unit Japanese insurance.
right. It's a single pay whole life insurance policy. A mini single pay whole life insurance policy is tucked inside of a bigger umbrella called a regular policy. This is, in Nelson's book, he talks about, remember that timeline he talks about? He says, here's a single pay and here's age 65. The PUAs actually give us the ability to buy those single pay policies that we want, right? If that's what our desire is. But what happens is, now, I used to use the example, I said, a PUA for me was, if I put $1 into a PUA, I used to get $4 in death benefit. Now I'm older and fatter. I put $1 in, I get about $2 of death benefit. So the older you get, the less death benefit your PUA is purchasing. But all it is just a mini single premium whole life insurance policy. And so what happens is when you were buying those PUAs, and this is where I had to have the conversation with my wife when she says, well, why is that term insurance policy going away? We've purchased now enough PUAs to buy enough death benefit to replace that term that we originally started with. Now, my problem was I had a bit of the arrival syndrome when I set up those policies 10 years ago. I thought, what I want to do, let me get to that. Yeah, this is Lynette's policy with One America. She'll probably kill me if I didn't even ask her permission, but oh well. So this is our kitchen remodel, by the way. And so we have a loan out there for $87,000. She's paying $700 a month out of her checking account to repay that loan. We have it written up in a contract. We have an amortization schedule. I heard somebody else saying it. I think it's hugely important. When you take a policy loan, treat it like a business. The most important thing you can do is treat it like a business. The best way you can treat it like, and I didn't do this right away. I mean, I made so many mistakes, it's unreal. But where we found it would become real valuable is I'll say, okay, here's an amortization schedule, here's a contract to pay it back with penalties if we don't, so on and so forth. But what happened was she had $400,000 worth of, $250,000 a term on this policy when I originally set this up 12 years ago, 11 years ago, whatever it was. And what happened was we got a letter that says, hey, this is a 10-year term, this is gonna go away. Again, that's what the design was. But she had the policy, she went through the underwriting, she says, well, Jesus, I don't want to get rid of that. She almost chastised me for having it designed it that way. But that's the way we originally designed it. Now, is it right or wrong? At the time it was right, and when I look back at it now, I would have done it definitely different. Because I was designing, my thought process at that time was this, not this. I wanted to maximize my internal rate of return. I want to maximize my cash versus looking long term. If I had done it over again, maybe I'd have done like a 15 or 20 and converted it after 10, which I should have done. But she's healthy enough, so we got a different policy. But the point being, when you have policies, designing what you think is right today maybe isn't right down the road. And again, that was my fault. I'd had that rival syndrome. I read the book and I'd done like 2 policies. I knew what I was doing. I didn't know anything of what I was doing. I designed my first policy that I wrote on myself. I didn't put that up here. I had it so it had a level death benefit, and what was happening was it was growing cash like crazy. But when we hit 10 years, it's going to become a MAC. So this year, it's going to become a MAC. So now I have to go down to just paying base premium. Is base premium bad? No, absolutely is not. Base premium is a wonderful thing. Because what is base premium? I hear James Netherly talk about it all the time. Is he in here? It's the current assumption of future, I don't remember exactly what it is. But it's like a mortgage. The best way I can explain it is like a mortgage. You make that payment, so it equals that death benefit sometime in the future, which is your life expectancy. So it's a great thing. So my policy that I designed, again, thinking I knew what it was, what I was doing, and I was focusing on the wrong thing. I built it so my policy now is just down to base, or just a little bit over base premiums that we can put into it. Because I had the death benefit, the term going away as quickly as possible. So when that happened, now I'm like, guess what? I'm short of how much money I can put into my policies. Because it was just the wrong thinking 10 years ago. So point I guess would be is don't think short-term, think long-term, find a mentor to help you walk through the process and help you get through that mental block, because that's something that I didn't do. And probably the last slide, so we out of time, pretty close, is I saw Vance do this, and I'm like, you read my script. He's stealing my thunder. Everybody stole my thunder today, but that's right. This is what I call, so typically when I'm doing this with a client, I'll call this the Borth Family Bank. And this literally helped me get over the hump of understanding IBC. And I don't know why this did it, but it was probably, everybody has their own thing that got them over the understanding of IBC. And so what I tell, and this is the conversation I walked through with the client, I said, you pay premiums into these policies, because what are you doing? You're building a warehouse of wealth, right? Then what happens when you need to buy a home, investment, or whatever it is, buy a business, whatever it is, then what we do is we say, hey, we want to buy this piece of real estate. So we come back to the Borth Family Bank, and then we say, okay, we need to draw some money. So we go to the general ledger of the insurance company, and that money comes from the insurance company's general ledger. Does it come from our policy? No, thank you. Can I get an amen on that? We're down south, right? There we go, that's what I wanted to hear. They just put a lien against it, and it continues to grow. And then what happens is that we buy that piece of real estate, we have payback terms and contracts, it comes back into our Borth Family Bank. Again, it's probably not legal to say, so you can edit it out, Dave, if you want. And we take the difference, because this cost me 5%. This is paying back at 10%. Why 10%? I don't know, I just made that up. Because you can, right. That's a great point. But it seems reasonable, right? And so we pay it back, and then we take that extra interest that's coming back, we funnel that back into our policy. Because what business are we in here? Banking. Finance business, right, the banking business. And what are we selling? We're selling money, in essence, right? The markup on money. If you remember how all that works, who the players in the game are, how banks make money. So we have inventory, and we just have to hold our inventory somewhere, and that inventory just happens to be over here. These are our warehouses to hold our inventory. The policy is just our warehouse to hold our inventory. And so when we need it, then we use that money just like any other small business. You sell that hammer, you take the profit, you go buy more hammers. And we bring it back in, and we go back and we replenish our inventory. So again, this was a real helpful when I was building my policies as far as to say, how do I get people to understand the process? Because I was getting lost right there. You know, everybody knows me. I have a very mathematical mind. I can see stuff, and I'll read stuff, and I get mathematics. But I couldn't understand process because I was stuck in the mathematic world versus the process. Any questions around that? Any thoughts? Again, this is probably all baseline information, but it's good to go over again and again and again. So I had some thoughts last night as I was finishing up my slides and redoing them, and after I tore up my whole presentation the first time around. If we depend on policy, cash values, and riders to make our sales, how long before changes in our industry put us out of business? Right? Because what's going to happen in our world 5 years from now, 10 years from now, next year? Everything's going to change, right? Our responsibility is to teach banking process, and building banking habits. Above all, that's the most important thing, because that's never going to leave us, right? That's been around for thousands. This has been around for thousands of years. This has been around for hundreds of years. The thought process of how we think about money, how we teach our clients to think about money, and the process and habits we build with them is probably the most important thing. That's all I got. Any questions? Any thoughts? Anybody want to challenge me? Tell me I'm full of crap. I'm fine with that. Mary Jo.
I'm not going to challenge you. I just have an addition. As far as like, you say it's about getting to know your client,
Yes.
but you can't know your client without asking the right questions or asking questions. And so I'm just going to add that to Wade's presentation. It's just, I have learned that I didn't ask enough questions right away. And Wade and I work together very closely, obviously. So ask, and like I am really good about asking questions.
Yeah.
My husband, and I know he's my husband, but I want to know everything. We can't, it's not just about getting to know their world, but getting to know their family's world, right? Do they have a family business? What's going on with the kids? Do they have an estate plan? Knowing everything about them is going to be able, you're gonna be able to create policies out. You're gonna know how you need to structure it, who they need to be on, all that good stuff.
Yeah, and I would agree with that. I heard probably 5 times this weekend it's about talking to your clients. Jim said it, Vance said it. I mean, all the other presentations I heard said the same thing. Getting to know your clients and asking not just questions, because you can ask questions all day long that don't make a hill of beans, but asking the right questions can be the thing that you have to ask. And I would agree with that 100%. So,
Mind if I share about a policy that I did poorly on myself?
what's that?
Mind if I share about a policy?
I would love for you to share a policy that you did poorly in yourself.
First off, did anyone here build a policy that you could go back and change today if you could?
I would in a heartbeat.
Yeah, most of that.
Yeah.
So, one of the policies, I did a policy for myself, it's only a small policy, I think it's like $200, it has a huge term right, only for the purpose of conversion, we don't have the same term stuff you guys got here. But it was like for complete insurability, and, you guys have price bands here, when you go over a certain level of insurance, you get a bulk discount, you don't know about that? Okay, so it was like a small amount, I think it was 50,000 was the price band, I didn't know about price band, nobody told me. I just solved for the deposit amount. And of course, what I found out is I was right below a price band. Had I actually just tweaked the illustration a little bit, didn't know, no one told me, I could have actually put less money in and I would have had a more efficient policy. Well, the reality is I would have put the same amount of money in and I would have had an even more efficient policy.
Right.
Does that make sense?
Yep.
Nobody told me about that. Now, am I happy to have that policy say,
Yes.
yes, but if
Yeah.
I could go back and change it, I would.
Right.
That's okay, I don't need to, but that's a lesson that I learned, that I get to share that lesson with other people. And that's, I think, a lot what you're talking about. There's no perfect policy. The best policy is the one you have now, and you can plan for the next one you're gonna get out.
Right. So maybe actually the better part of that equation is the perfect policy is the one you're buying tomorrow. Yeah, because you can take all your extra mistakes, the mistakes you made in the past, and apply it to the ones that you're going to buy or sell your clients tomorrow. It's about experience.
Someone off the back, if anybody wants.
Yeah. You need- Can be.
He's got friends.
Yes, sir.
You started off with talk about synergy between you, the client, and the insurance company. And after going through the whole presentation, I think there's a silent partner, unfortunately silent now, and that's Nelson. Without him, we wouldn't have any idea what we're doing.
Yeah. And I think that's addressed in my very opening lines when I was talking about teaching bell cows. He was the teacher. He taught me. He taught probably everybody else in the room. So yes, but from a sense, that's probably true. But that's how I see it, is that I'm his extension, because you can't see everybody. Not everybody in here can see everybody. So the whole point is teaching your clients to be your advocates, to understand this, and they will pay you back. Nelson taught me. I see it as my responsibility to teach others. So I think it's everybody's responsibility. So I would kind of agree with you in the sense that Nelson is a silent partner in that, but it's through us that he's working, through God's infinite knowledge, that he's just helped water. I mean, I sent that email just thanking him for being my mentor and just being so helpful to me. And he says, I didn't teach you anything you didn't already know. I'm like, wow. Nelson was such a humble person that I fell apart when he told me that. He's like, I didn't teach you anything you didn't already know. I just helped water the seed. And so it's just, that's the legacy that he left, and he is leaving. He'll leave for generations to come. That's his intergenerational impact that he's had on us. So, any other thoughts or questions? I don't know where we're at for time, but.
Wait, can you speak a little bit to new people? So like you guys are talking about the fact that you were new, you didn't know what you were doing, you wrote policies
Right.
wrong. Can you speak a little bit about the fact of splitting business and doing business with a seasoned agent?
That's huge. How do we learn? How do we learn in this business?
Get our hands dirty.
Personal experience. How costly is that?
I'll let you know when the bill comes in.
Yeah. I mean, okay, so I got to tell you the story. So we bought a lake cabin, and I'm like, I got to put new toilets in. I can do the plumbing, right? I've seen it done on TV. I stay at Holiday Inn Express. So I pulled the toilet off. The wax ring was a mess, so I think I fixed it. Go to put it on. I'm like, 2 days later, I'm like, damn, I got to call the plumber. If I would have called him right away, it would have been about a $150 bill. But because I say we, I use my wife as a scapegoat. Because I made that mistake thinking I knew what to do, what did it end up costing me? It cost me about $800 when it's all said and done.
Plus your time.
Plus my time, right. Yeah, I didn't put any value on that. So the point is, people are like, oh, I don't want to split a case. But I'll tell you what, you'll learn so much more. You'll grow, you'll write bigger cases. You will be educated. I mean, you talk about leading bell cows, like Nelson's thought process was he wanted to teach everybody. I want to learn what I want to learn, and I'm willing to pay somebody to do it. And if I can mentor with somebody or join with somebody that's doing it, hallelujah. Again, it comes back to what kind of mindset do we have? Are we a scarcity mindset? I mean, I think naturally that's where we go to, but we have to fight that every day, you know. That's one of Nelson's laws, right? So fight that scarcity mindset. Say, I want to work with somebody that knows what they're doing. So I don't have to make that same mistake. I don't have to get my hands dirty learning how to put together a policy, because that's not the important part. We want to work together so we can, I want to learn from your mistakes. Do you want to learn from my mistakes? Because that's the best way that we learn is from somebody else's mistakes. Unfortunately, we're probably prideful enough that we don't want to learn from somebody else's mistakes. And then it comes to the fact that we have to admit that we made a mistake. And then that really becomes costly. So I think it's huge. Sir.
Can I just share one early mistake?
Welcome. I'm all about mistakes since we're sharing.
And Mary Jo's been very good at helping me on this, that I don't ask enough questions. But this is a case in which I did not ask enough questions. I was so excited about the process. I got this guy was an Uber driver, and he had a family, and he was all excited about getting rid of his debt, and I had this whole thing structured for him, but he didn't tell me the other half of the story. And so I got this thing all set him up with a policy. He proceeded to max out his policy, and then he stopped making payments. Well, okay, that's fine for him, but what does that do to my book of business and persistency? Like, oh, shoot. So now I call him up, and he has no money. What, am I supposed to loan him the money? No. So what we wound up doing is I bought out the policy. I set up an LLC and dumped it in there. That was not what I wanted to do. That was not my objective. So one way to save persistency is that, but definitely that was a lesson learned for me by not asking enough questions.
So my question would have been, if you were working with another producer that was really good at asking those questions, could they have flushed that out?
I don't know. I would.
Maybe? Maybe not? Say yes. So I'm going to, what's that? The client. Right. The person we're trying to help is the one that ends up paying that price. So.
No, he actually did okay on this deal because he had maxed out the policy loan, and I had to backfill the whole thing. He walked away.
Yeah, well, still, he loses the insurance. So.
I did
Yeah,
take care of it.
right.
Because I felt that was
Right,
important
he
to
just
do.
lost insurability.
He lost insurability and he lost his death benefit coverage. How important is that when he dies?
Well,
Yeah. So.
yeah.
Right. Exactly. Thank you.
Buy it back. Give it back.
Anything else? Where are you at for time, David? Are we good?
You're good. You got like 5 minutes.
We have 5 minutes. Can I share with you one more thing I just thought of when I was up here prancing around? So when has anybody seen, again, this is steal, I steal from everybody. I said I steal from everybody. I never had an original thought in my life. Has anybody seen the 5-minute lesson on life insurance? So this is, what's that?
10 minutes.
10 minutes.
Well, yeah, it used to be 5 minutes when I first got started. And this isn't to promote Circle of Wealth, but I love this example to explain this to people, to get them to see the simplicity of IBC, or how to, not simplicity of IBC, the simplicity of how to put together a policy. And so I just draw a couple of lines. Let's see if I can do this without being in the way. Draw a couple of lines. I'll say there's a minimum and a maximum that anybody can put into a policy, right? So who do you think sets the minimum what can go into a policy? What's that, insurance company? Yeah, exactly right. This is called term insurance, right? What do we get for term insurance? Death benefit and death benefit only. Who sets the maximum that can go into an insurance policy? The IRS, right? So I usually drop in big bold letters, right? IRS. I said, so why do you think they put a maximum on how much you can put into a policy? All right, it must be good, right? It must be good. So why have we been conditioned to think that putting this minimum amount just for the death benefit is the way to go? And I heard somebody else say, is our income common or uncommon? Because the people that are out there with the noise, trying to convince us how to do something, they're creating messages for the masses, and the masses are people that make less than about $60,000 per year in a household. And so they say you need death benefit. You do need death benefit, 100%, as much as you possibly can get. It's a different conversation, right? My thought process is like, let's put as much money as we can into this policy, and we typically do that, we keep the death benefit as small as possible, and when we're designing our contracts. Again, this is for probably 80% of my clients. If I did this for everybody, then I would be guilty of just what I said. But this is real, this example helped me a ton to explain this to clients. So we keep the death benefit as small as we can, we put as much money as we possibly can, and if we go over that line, this becomes a modified endowment contract, right? If we keep underneath of it, again, this is my idea, but I love it, this becomes the maximum efficient contract. Now, do we have to fund it there today? Maybe we fund it here to start with. What does this create for us? It creates a hole for a windfall. So, just a simple example, you can take that and talk to your clients about using that, or I think you can go out and Google 10-minute lesson on life insurance. It's kind of the same way. I've adapted it a little bit. And so, again, we talk about term insurance. Again, people might like it, might not like it. There's a whole debate about it. I'm not saying which one's right. If you want to increase that, if you want to move that ceiling up, you add term insurance, but that comes with cost. So there's a cost to do that in order to get that much more money in so we can do the 75-25 or 90-10 or whatever it might be. So that's just a quick down and dirty example of how do you get that message across to people. And I think David was talking about it in his general presentation, or maybe Bob was. Sometimes we have to use those kind of ideas to get people to kind of open their minds up and start to think. So.
What did you call that? Maximum?
Maximum efficient contract. So, well, I don't want to spill all my candy in the lobby. So, yeah, is that one for cow too? Again, I've never had an original idea. Anything else? Thank you. You've been fabulous. I appreciate it.